This is your trade rundown for September 23, Wednesday. So this was the day that I did not get on time. I was a little late, but let's play it out. So prior to New York opening, there's a couple things that I see here. Just trying to make sure you guys can see all of this in the video. So looking at what we have here, we're at the bottom of the trend channel. We would be expecting this to want to pop up from here because that's what we do when we are above the 500 and we're at the bottom of the trend channel. But you guys got to remember, this whole past probably about 2 weeks, 2 weeks and a half, price has been trending upwards. At some point, the upward momentum does die out and we either range or we break down. So if this was one of those times where we wanted to break, we have to just be careful and see. Right? If we want to see price break up, we got to break P hard and continue up. But looking at this P gold zone here, it's a couple things, right? It is the high of the day. It is P gold zone. It is level. If we look left, which is what I always tell you guys to do, if we look left, it is the high of London. It's an area of heavy resistance. Not only was it the high of London, we also rejected it here in New York the previous day. So something about this area is very substantial. So to see price break into it, I would need to see it break hard above it before I truly believe that it wants to go up. But let's play it out. Because if you end up taking that 630 momentum, it's fine. But remember, don't go full port every inch here until you have confirmation that price wants to go up. So I do draw this trend line here because this is the uptrend structure that I'm currently seeing for this time, right? We trade using the juice strat. We trade what we currently see. Currently, it is an uptrend. So I would want to believe that this wants to go up. 630 hits. Big volume. Once again, it's a substantial area that we don't know if price is going to reject based on the past. And now that I squeeze this even tighter, I see that the day before that, it was the high of that day. So there's a lot of reason to believe that price may not break this area. But here's the thing, even if you do enter into it, let's just say you do enter into it because it's a beautiful volume to the top side. Let's say you disregarded all of the previous highs and you risked it. Remember, we don't get into all of our contracts all at once. We wait for confirmation. So you get into the one contract here and you're telling yourself, if price continues up, yes, we'll add contracts, we'll make more money. But if price rejects and comes down, make an executive decision, exit the entry early. You don't have to wait for price to get all the way down to your stop loss. And why is that? Why would we decide to do that here? Because we're near the gold zone, right? What's the rule with the gold zones? Price will either break or price will either bounce. So if I get any type of volume that's telling us that it doesn't want to continue up, I'm going to quickly exit. I don't want to wait for price to get down to my full stop loss. I'll just make an executive decision and exit it early. Let's play it out. Big volume to the downside. Look at this. Negative 45. Negative 115 stop loss. This is a much better decision to make, right? Exit now. Take the $45 loser right now. Wait for the next entry. Make up your loss and make a profit. And it's fine. Why is it fine? Because we're here on the gold zone. Price is going to tell us where it wants to go. So just wait for it. A wick to the top. If you didn't exit on 635, you should definitely have exited now. Wick to the top, thinking based off of deduction, price doesn't want to go up. So it probably wants to go down. If you didn't exit on the previous candle, you should have exited now. Play this out. Boom. Right? Let the candle speak to you guys. I always say these candlesticks are a language. When they're talking to you, listen. So if you didn't exit on these last two candles, you damn well better have exited now, right? Because now we've broken back underneath the gold zone. But I don't get in for my sell just yet, right? We don't get into the sell. Why? Because of this uptrend structure. Price can still bounce right up and possibly head up. So for me to want to believe in the downside, I need to see price break this uptrend line and give us some strong volume to the downside. Play that out. So yes, volume to the downside, but it's a wick, big wick to the bottom. I don't enter into sells off of a big wick like that. Might be supporting the bottom and heading up. Now, at this point, this is where price starts to range. I remember this. Wicks to the top, wicks to the bottom. But where is price relative to perp? Price relative to perp is on the downside, right? Price underneath perp, likelihood of price going down, very high. Price above perp, likelihood of price going up, very high. Play this out some more. So already, I start to see the wedge forming, right? Within all these wicks, I already start to see wedges forming. This one probably a little bit higher. There's a wedge right there, a pizza slice. For those of you that don't trade, a wedge is just a pizza slice. It's when price starts to range, and then at a certain point, it gets so small and tight that it has to break out somewhere. And that's why I like trading when I see a wedge, because the easiest but the hardest part for some of you is to just be patient and let wedges break. It will tell you where it wants to go. And remember, price is underneath perp. What's the likelihood? Price is going to come down. All we got to do is wait for the entry, wait for the reason to take it. Wick to the bottom. Volume. Volume to the downside. Why do I not enter in here? We're still inside of the wedge. Yeah, it's a little bit out, but it's better to be safe than to get in early and then price turns around or something. So wait for it to fully break out of the wedge. Don't get impatient. Boom. See, price goes right back up. Price likes to trick you guys. Just be patient. The best way to not get tricked is to just be patient. Wick to the bottom. Wick to the top. Tiny candle. See how it's getting so freaking tight? Big wick to the top. Volume. Volume to the downside. Yes, it is a wick to the bottom, but for me, this is really the first candle to break out of the wedge. And we're underneath perp. This time, I am okay with risking my one contract. Oh. I'll risk the one contract purely based on price, perp, and breaking out of the wedge. So, what do we do here? We wait. I don't enter into all my contracts yet. Because, yes, the wick to the bottom tells me there might be a chance that price will bounce back up. But I still got to take it. If that's the way price is going to break out of the wedge, I'm believing in it, especially if price is still underneath perp. Let's play this out. I'll add contracts when we start giving volume to the downside that we want to break the previous low and break through the 500. Volume. Volume. That's an upside down hammer. It's beautiful. At that point, that was where I added into more contracts. I don't know how much I ended up going for. I know at this time, I think on that day, how much did I take from that? I think that was like the $300 day, if I'm not mistaken, the $600 day. I know I ended up taking it right in this area. I know once we broke the 500, I ended up putting stop loss or TP a little bit before the previous day low right over here. So let's see what it is. 110. That looks about right. That's about right. So from here, I added contracts. That's the volume candle pushing us out of the wedge and the and pushing away from perp. And from here, we just let price do its thing. Drop. Drop. Done. Easy. On these days when we wedge, and remember, we took the $45 loss at the beginning, and then we made it up right there. That's why trading with the juice strat, there's almost no way that we're going to fail. Our win rate is so high, and our risk to reward is usually always very good. There's no way you can not consistently make money unless it's you messing it up. And that part, if it's you messing it up, you need to accept the fact that it is what it is and figure out how to improve on it. There's nothing else. On days when we wedge like this, the cure, the solution to not getting screwed by the market by the chart is to just be patient. Literally, anybody who has eyes can look at this and see the wedge form and then see price break out of the wedge. Even if you didn't enter into the first contract here at 7:55, you would have seen the upside down hammer right here at 8 o'clock. Boom. Watch what happens here now, right? Juice strat stuff, juice strat fundamentals, gold zone to gold zone. Where is price going to go? We rejected the gold zone. Likelihood of us coming down to the gold zone, very high. Play it out. There it is. The gold zone movement's real, guys. I've built my whole career off of this. Alrighty, guys. What was that? That was Wednesday, right? Wednesday, September 24th. That is your trade rundown. If any of you guys have any questions, hit me up. Takeaway from this day: be patient when we're in a wedge. Let the chart tell you what it wants to do, especially when you have perp. Perp is kicker. Perp is king, baby. And with the juice strat, if anybody is interested in learning how to trade, if anybody has the knowledge and experience but cannot figure out why their strategy isn't currently working, I have one for you. Hit me up in my DMs. I would love to talk to you guys all. Juice Strap, baby, Ed out.